So gold has been doing pretty well lately. This is the beginning of the move I've been telling you about for eons now. We're not just talking about gold today. We got a whole bunch of other things to talk about as well. I got to show you some things, top headlines, but we're going to get into what is going on with gold and how I have a special message if you own gold stocks. At the end of the video, I'll give it to you because I just need to point out something before you get too excited.
Your teachings are the best that I've ever come across anywhere. I learned so much more about investing after joining the Peter Leeds Academy.
What I told you is that it's all about the pivot. When the Federal Reserve stops raising interest rates and they start lowering them, when they make that announcement, that's when you're going to see a huge spike in the price of gold and a decline in the American dollar. But it doesn't have to be literal. It doesn't have to be when the Federal Reserve pulls the big lever that starts lowering rates. It's when they put it in the minds of people. Investors now had the pivot point in their mind. You might have felt it. It happened just over the last few days. Now, everyone is expecting rates to decline several times in 2024. And here are all the precious metals prices from CNBC. You can see here, gold is up $58 today. Silver is up $1.57. This is a great example of how I always say that the silver to gold ratio is going to normalize. It's going to get better. Silver, reflective compared to gold, is way too inexpensive right now. Historically, you want the silver to gold ratio to be more like 40 to 50 ounces of silver to buy 1 ounce of gold. Lately, it's above 75. I don't remember exactly what it's at right now. But what I want to show you here is that silver increased on a percentage basis, 6.85%. Gold increased 2.90%. And that's what I'm always saying. You'll see bigger gains in silver as it catches up to a historically realistic level of number of silver ounces to buy 1 ounce of gold. Which means that silver overall, technically, all other things being equal, would be a much more profitable investment than getting into gold at these levels. Both will be very profitable, in my opinion. Here's platinum at $42 today. We talked about that in the last video. Palladium's up $121, or 12.5% in a day. For a precious metal to move that percentage in one single day is absolutely nearly unheard of. This is a chart of the DXY, reflective of the US dollar. Let me zoom in here a bit for you. 1 month chart. And if you guys took the Peter Leeds trading chart course, you'll know that this is a really bad setup for expectations and probabilities for future values of the US dollar. If this was a stock, you'd expect that stock to drop down significantly. And you will very rarely see this kind of setup and see it followed by any kind of tremendous strength or anything like that. Here's a 1-year chart of gold from CNBC. We can take a look at 6 months. And you can see as I zoom in, you get closer here. This is the action of gold prices. And what you're going to see, gold prices are moving. Gold mining stocks moved in concert with it, but they will continue to move because the profit margins of the gold mining companies are absolutely about to explode. Here I'm taking you to the CNBC homepage. You can see how the markets are doing. And all the markets, as you'll see here, I'll scroll down a bit, are doing pretty well. I told you before I don't trust these markets at all. Dow rises to fresh record as investors cheer more strong economic data, falling rates. The falling rates will have a big impact. The economic data is being misinterpreted, in my opinion, by most of the people who are telling you about it. GM's laying off people. What else we got here? Oil rises more than 3% on weaker dollar. This is part of what I told you about with the Fed pivot. Things like oil, coffee, gold, silver will all increase dramatically in price because the US dollar is declining in price. Anything purchased with US dollars will seem like it takes more US dollars to buy the same product or asset or commodity. Putin just wants Ukraine to agree to give him some land. Manhattan median rent falls for the first time in over 2 years. Just more good news, I suppose. Here's a few charts of the gold mining stocks that we like. We like plenty of smaller companies too. I'm just showing you that they're all displaying the same patterns now. Every gold miner, they're trading like a flock of birds. Here's Newmont Mining, which I've talked about many times. Here's my special message. If you own gold stocks, if you're into any of the high quality gold mining companies that we've been talking about for eons, then I just want to mention something. This is the beginning of the move. I believe that there's going to be tremendously higher to go. A lot of times, especially after there's been so much shareholder exhaustion, where gold mining stocks did poorly and then they dragged along for a while, kind of consolidated, you get bored. And then when you see the first gain, a lot of times you'll say, well, that's a profit right now. They grab it and it looks so juicy. Listen, don't act too soon. And I want to give you this message to literally center yourself, because there's actually more risk here than you realize. In this gap, that's a huge positive trend. If you guys take my charting course, you'll know all this stuff. Gold mining stocks could go to the moon. Maybe that's going to happen. But a lot of times people would sell after they see a 100% gain and then cry in their beer as you see the stock keep on going higher and higher and higher. That's one of the reasons I always tell you guys to scale in and scale out of positions. You sell a little portion and you wait, and then you can buy more, sell more, whatever. It gives you an added benefit of having the power of time on your side and to have time to think reflectively. And here's Barrick Gold, the big daddy, and you see this gap there? This was nearly an outside engulfing bullish candle, and then this gap is incredibly bullish. The most important thing in the stock market, if you're trading stocks or trading anything, even at the market, at the flea market, it's about getting your mind right. That will make more difference than reading 1,000 books. Just close your eyes. Think about the risks that are ahead of you, the profits that are ahead of you. How do you avoid the risks? How do you grab the profits? That's what we talk about on this channel, of course. But you need to decide what works best for you. Do not jump the gun on this trade. This has been a long time coming, and the longer it took to get here, the more upside I believe we're going to see. And I'm not selling you the moon. I'm not saying that gold prices won't go down, that mining stocks won't go down. I believe that gold mining stocks are going to catch up significantly from these levels because of a little bit of a delayed reflective move to the recent spikes we've seen in gold prices.
At Peter Leeds, we're all about getting you profits quickly and easily.
Please subscribe for more premium investor enlightenment.